Your market news now. Asian equities gained, led by Japan after U.S. stock hit records on the back of inflation coming in line with the expected data. The moves came after the Federal Reserve's preferred inflation measure on personal consumption expenditures matched forecasts. Meanwhile, locally, telecoms operator MTN flagged an up to 80% fall in full-year profit, hit by the sharp devaluation in the Nigerian naira, which swung its biggest unit, MTN Nigeria, to a loss. MTN said the devaluation drove higher operating and net finance costs and foreign exchange losses for MTN Nigeria, which are expected to impact the group's financial performance. To talk to us about the latest when it comes to the markets, we're joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. I mean, as we wrap up the week and you look back, what's the current market sentiment?
Well, Anastasia, I mean, the funny thing with markets is there's always a lot of noise and gnashing of teeth, even as they creep higher. I mean, you know, overall global market sentiment is actually quite positive. So the narrative is one of a topping out of the interest rate cycle, even though I must say expectations for GDP growth in the US are perhaps looking stronger than they might actually allow that scenario to play out. So, you know, the question that's sort of going to be churning through the mind constantly is, has the Fed actually done enough to rein in inflation? And I guess we'll see about that. In the bond market, for its part in the US, so far it's spent the whole of 2024 quietly ticking higher, the dollar strengthening. So that's, from the bond market's point of view, that the sentiment seems to be there that the Fed may be very patient before it really takes its foot off the brakes.
I mentioned in my intro that we got a trading update from MTN where they are expecting headline earnings per share to be between 60 and 80% lower. And this is on the back of the sharp devaluation on the naira. What did you make of the trading update? And I suppose when those numbers come out, what should we be looking out for?
So I guess the difficulty there is that when you ever have a huge devaluation like Nigeria went through, there's lots and lots of noise that comes out in places that you might not have expected. So you can see quite a wide trading range pointed there towards the kind of revaluations that you see. I mean, revaluations of debt, revaluations of forex balances, any hits on hedges, what were revised interest rates, all of that can make a terrible amount of noise. So one of the most important things for investors in MTN, who I must say have had quite a rough year already, is going to be to look at the actual operating metrics and say, okay, underneath all the noise, do we actually have a good business under here still or not? And so I think a drill into the detail is going to be quite important when those numbers come through.
Speaking of a drill into the detail, we've got a lot of companies locally that are listed that will be releasing their earnings, the likes of ShopRite, we've got Nedbank next week and the like. What are you going to be paying attention to when it comes to corporate profits? So what's your expectation?
Okay, so I think generally the whole profile of load shedding is going to be quite messy, and we've got the issue of low local growth and low confidence and high interest rates. The key issue is the first half of 2023, load shedding was really bad. And the second half of 2023, it's significantly improved to the extent that, well, you know, if we're going to compare Decembers to Decembers, I mean, 2022 December was absolutely terrible. So there's a chance that the interim numbers that are going to be coming out could look a little bit better. Full year numbers are definitely going to show some strain. So yeah, I mean, that in a broad brushstroke is what we're looking at. Interims okay-ish, provided interest rates didn't kill them. Full year numbers are definitely going to look a little bit ugly.
Let's talk about inflation in the US. We got that PCE figure, which we were expecting. And I think we got a fairly okay-ish number. It didn't come in higher or in terms of expectations here. But when you have to look at the year ahead, and given the comments that we've been getting out of the Fed and some of the data, what's your expectation for inflation? Are you expecting it to be sticky, or do you think at this point the Fed is on the right track here?
Well, I must say, as the data comes out, and look, I mean, it's not a very long data line that we have, but I mean, there is, I guess, some growing grounds there for the idea of inflation starting to be more sticky. I mean, first of all, the actual data that's come out is sort of showing a kind of a bumping along the ground effect, which should be already telling. But one of the most important factors in US inflation is what is housing inflation and particularly rental inflation doing? And the answer there is that that's not only quite high, but that also is leveling off. I mean, so the December data was for that line item was about 6.2%, and it's currently 6.05% for January. So in a number that had been coming down sharply, that is indicative of leveling off. So, and that, by the way, I mean, that's a 30 to 40% line item in the US inflation basket. So, yeah, sticky inflation in the US is possibly a scenario that's hardening up.
Just quickly, how have stocks performed in the month of Feb?
Well, generally across the globe, mostly good. In fact, I've even been pleasantly surprised that China has seen a bounce in the last month because they've been a complete liability. So nice one to see. Other markets, mostly all positive.
All right, Warwick, thank you so much for your time. That is Warwick Lucas from Galileo Securities. And it would have been great to have a conversation with him in terms of what he believes to be the biggest disconnect in the market, given the fact that in the beginning of the year, we did see a big gap in terms of what the market was pricing in terms of Fed hikes, as well as what the Fed was pricing in terms of their implied dot policy.